In the Chancellor's budget in March 2011, Her Majesty's Revenue and Customs said that it will be coming down harder on, quotes, disguised employment or false self-employment. So can you give us a snapshot, since this is the kernel of the IR35 quandary, can you give us a clue as to what they mean by that?
Yeah, and this is the third attempt, certainly in my career. Ken Clarke started it in 1995-96, Gordon Brown had a crack at it inevitably, and now George Osborne is doing it too. What the Exchequer want to do is to make sure that people who are genuinely in relationships of employment with an end-user client pay the proper level of national insurance contributions, NICs. And what IR35 means is that if you have a surveyor, for example, who supplies their services to a limited company, their own company, then that company will contract with an end-user client. What IR35 says is if in reality, if you removed that service company, the relationship between surveyor and client would be one of employment, then the HMRC will tax the service company for the full PAYE tax liability.
Right, so IR35 has been introduced to clamp down on Revenue and Customs, what they believe to be bogus self-employment, effectively.
That is correct.
So just give us that again in terms of what constitutes an employee and what's a freelancer or an independent consultant.
Well, you can click on the HMRC website and get some basic employment status tests there, but the essential test is this: if you're an employee, you should be working under a contract of employment, you're paid Schedule E, PAYE, and you're under the supervision, direction and control of the employer. If you're a consultant or a freelancer, then you're in business on your own account and you take the risk of any transaction. You may be paid on a project-by-project basis or on a piecemeal rate, and you are paid on a Schedule D basis gross, and you are responsible for paying over the necessary tax to the revenue.
So why does it matter so much?
And people feel very strongly about this if they're genuinely self-employed people. Typically someone who supplies their services to their own service company will pay themselves, possibly their wife as well or husband, a basic salary to ensure that they pay themselves the minimum requirements under NICs for a state pension. And the rest of their earnings they'll take out by way of dividends once the profits have been calculated for that company at the company's year end. Now that matters because you pay tax at a much lower rate, between 10 and 20% on dividends, than you do on PAYE earnings. And so it gives people much more flexibility in terms of how and when they can take out their pay.